This is a quick overview of Lloyd's Specialty Insurance. In this video, I'll cover a brief history of how insurance started, then a basic guide to how insurance works, then an overview of Lloyd's of London. I firstly wanted to outline the size and importance of the London market. The London market is the largest global centre for commercial and specialty risks. It controls more than 91 billion of gross written premium. Now, just to put that in context, the second largest market is Bermuda with 39 billion. Switzerland has 31 billion and Singapore has 8 billion. So London plays a very important role in the specialty market. The London market employs 52,000 people within the UK, with 35,000 of those in London and a further 17,000 outside of London. It provides 26% of the city's GDP and about 10% of the overall London's GDP. Modern insurance industry, as we know it, started after a huge fire destroyed the city of London. In September 1666, a fire started in Pudding Lane, which got out of control. It burned for 5 nights, and as there was no fire brigade, it burned a significant part of the city, and this was known as the Great Fire of London. King Charles III sent in the army at the time to finally put out the fire. However, it burned 13,000 houses, 90 churches, the Old Royal Exchange and St Paul's Cathedral before it was put out. A lot of people lost everything as they didn't have protection. Nicholas Barron at the time had an idea, which was to form a company to protect buildings from the fire of risk. His ideas were adopted and eventually spread across the globe. Since then, it has grown into a huge industry, with people buying insurance to protect against loss. So you have to have something which is at risk of loss. For it to be insurable, it must be replaceable, and the risk of loss must be possible but not certain. The thing that's at risk can be from various types of loss, so it could be from risk of fire damage, collision, theft, or others. You contact an insurance company and they will ask you a list of questions to see if they'll insure it. Your insurance company compares your answers to their stats, and based on this, they work out how much it will cost. If the insurance company accepts the risk, they check the coverage that you need in case of loss. Based on that, they'll decide what the premium, or they'll calculate what the premium is. If accepted, you're asked to pay that premium. Basically, you contact your insurance company and tell them about your loss. You tell them how much it will cost to replace or repair the item. They may send around a loss adjuster to check on your claim to ensure that the loss is valid and the damage or the repair amount is as you've said. You may have to pay a little towards fixing the replacement of the item, and this is called the excess. Once they accept the claim, they'll pay for it to be fixed or replaced. As customers pay their premium, it's pulled together. Some customers make a claim and this is paid out from the pool. If all the claims paid out is less than all the premiums collected, then money is left over. The insurance company has to pay certain expenses for running its business. Once that is taken out, then this profit is the money the insurer makes. So what happens if there's a complicated risk, such as an oil rig or a power station, or a satellite in space, or a fleet of planes that a commercial airliner needs to insure? Or what if you're a footballer who wanted to insure your legs from injury, or a singer who wanted to insure their voice? This is where you need a specialist insurance market, with experts who understand complicated and unusual risks. This is where Lloyd's of London comes in. Lloyd's of London is not an insurance company. It's a marketplace where insurance companies arrange insurance for customers with unusual or complicated risks. Lloyd's started in the 17th century in a coffee house. Ship owners would go to Edward Lloyd's coffee house to arrange insurance for their ships. If he decided to accept the risk, the merchant would write his name on the slip under the details. This is where the term underwriter came from. The number of ship owners increased and came to Lloyd's coffee house to arrange their insurance. The underwriting activities outgrew the coffee house, so they set up a special marine insurance company. They called it Lloyd's after the owner of the original coffee house where it all began. The market grew and eventually all sorts of risks were underwritten there. As Lloyd's grew, special roles were created to support the activities of the insurance market. There are a number of roles. First, the policyholder, who's the customer, and that's the most important role. So those are the people that requires the insurance. They discuss the company's risk with a broker. The broker asks a series of questions to understand the risk. The broker writes up the risk on an underwriting slip and discusses it with the underwriter at Lloyd's. If the underwriter decides to accept the risks, he signs the slip and receives a premium. Underwriters specialise in a class of insurance, such as property insurance, marine insurance, energy insurance, and reinsurance. Reinsurance is when an insurance company buys insurance to protect themselves from having too many claims. Syndicates provide the capital for the insurers, so when an underwriter accepts a risk, he does this on behalf of the syndicate. The managing agent employs underwriters and organises their activities. This includes ensuring claims and premiums are charged. They handle the claims and also track premiums. The cost of covering this activity is handled by charging a management fee to the syndicate. Lloyd's has an important role in this process. It provides the rules and checks that all parties are operating accordingly. It ensures members comply with local and global regulations. It provides reports about activities in the market, and it also supports and promotes the London insurance market.